I'm building a fully automated futures trading bot strategy. Now, in this video, I want to give you a couple takeaways and lessons that I've learned along this process that I think can help you as a trader overall, even if you're not looking to build a bot. Let's cover my top 3 lessons, and then we'll look at some of the highlights from today's live trading. And by the way, number 3 is the most important on this list. Number 1 is, as a trader, you can't have everything you want. You have to decide what type of trades you're going to take, which means you're going to be willing to give up these other types of trades. Now, what that means for me specifically is if you watch any of my live trading sessions, you know this, but if you're new around here, I've struggled between trading with the trend and trading basically reversals. I've gone back and forth. My strategy works better for reversals, but I think I like the trades better when I trade with the trend. As an example, obviously prices going down right here, we take shorts. Prices going up right here, we take longs. This is probably going to be a loss right here, but that's part number 1 is we have to decide what we're okay with and what we're not okay with and optimize for that. Now, trading trends versus trading reversals are very polar opposite, but here are some other ways that you could refine your strategy. Taking long trades only. Sometimes when you build a strategy, or most times when you build a strategy, one side is actually more profitable than the other. They both might work, both might have success, but one side could certainly be better than the other. Another way you can optimize is the size of trade. So as an example for me, I'm okay with a couple points of movement. 2, 3, 4 points. I'm good with that because I'm going to trade a ton. Some of you guys would rather have 20, 30, 50, 100 points of movement, which is also okay. I'm not arguing against that, but you have to choose which one you want. You can't sometimes want to go for 200 points on a move and then 2 points because your stop loss is going to be crazy and you'll have a lot of losses in there that blow up your account. So you have to decide what size of trade you want to go for and then be okay if you sit it out. We're going to have a trend here, or we have a trend at this point right here. Okay, so start to finish, let's just call this the top right here, boom, to bottom of this move right here. This is 41 points. Some of you would like to capture all of that in 1 or 2 trades. I'm okay taking 1, 2, 3, 4, 5, 6, and then this is the last one. 6 trades on this specific move to try and capture as much as I possibly can. I'm game for that, which means I'm going to have to pay a little bit more in commissions. I understand that. That means I have to win more trades because commissions are going to kind of catch up to me a little bit. Some of you guys would rather just catch this entire move in 1 trade, which would be sick. But you have to optimize for, sometimes you miss out and you jump into a short thinking you're going to get 40 points here and you get like 10 and then it reverses on you. You have to optimize for your trading strategy. That's another one. Now, the last part to this first lesson that I've learned is that trading one asset is better than trading many. And the reason for it is oftentimes you can spend more time optimizing, tweaking, and adjusting your strategy for one instrument. It's really difficult to make an instrument that's good for the NASDAQ, the S&P, the Russell 2000, crude oil, gold. It can be very difficult. Forex, crypto, the list goes on and on and on. I could take this and change it around to make it fit for any one of those, but the amount of time that I spend on it is going to be significantly less than if I just pick one and fully optimize for that specific asset. I think as traders, a lot of times we want to trade a bunch of different things. Maybe we want to appear really smart, or we want to have a ton of opportunity. But the truth is that the maximum number of profit, or the most money you're going to make, is going to be spent on one asset. So you might as well get really comfortable and familiar with it, because that's what's going to pay you the most. Okay, so that's kind of lesson number 1. Let's jump into the second. Lesson number 2 is tick data versus non-tick data. What does that mean? On TradingView, you do not have tick data. On Trade-Evade, NinjaTrader, and there are other platforms, you have tick data. Now I'm going to show you this. See how on TradingView, this candle kind of jumps around. I'm on a 30-second NQ chart here. A lot of movement, but it pops up, pops back down, pops up, pops back down. There is a ton of movement in between those different updates that we can't see. Let's go to Trade-Evade. You see how this candle is sliding much smoother? That's because Trade-Evade, NinjaTrader, has tick data. And what that means is that you can see a little bit clear into what the candle's doing and get a feel for what's going on. This is something that I did not pay attention to, that I'm basically giving all my attention to, because it's maybe the most important thing when it comes to building an automated strategy. Now, why does this matter so much? The answer is clear in my head now, but it wasn't before. When you have tick data, you have the ability to get more specific fills. On TradingView, you're basically getting these lump sums of data at once. And I would say it updates probably every other half second, or every half second or so. And so you don't necessarily get the best fill. You get the most recent data, and then from there, a decision is made to enter a trade, exit a trade, anything in between. My strategy, and we'll cover this in the part 3, has some break evens. And those break evens are highly important because it turns a strategy from kind of a winning strategy to like a really successful strategy, but only if the trades get filled and only if the data is kept up in time. On TradingView, I get a lot of jumping around. And so if you go and watch my live, especially the past few days, maybe this whole week really, you'll notice that I don't take the losses too seriously because I've got specific fills that aren't super accurate and I've got exits that also aren't super accurate. So I've got price moving really fast and TradingView necessarily can't keep up. TradingView really can't keep up at all. And what that is end up doing is taking some of my small wins and turning them into small losses. Some of my entries are off by a point or two or three and turning those trades from what could be winners into losses, making my losses larger and my wins smaller. So I've got this like perfect negative storm trading on TradingView because I'm looking to scalp. And it's very difficult to build, not necessarily a high frequency bot because that's not what I'm going for, but pretty close. It's hard to build that on TradingView without tick data. So I need my candles to look like this so that I can get a more precise fill and I can take profit when I need to, stop losses can get hit when they need to, and we're in good shape. Hopefully that makes a little bit more sense. Now, if you're watching this and thinking, well, can I trade on TradingView? Maybe I shouldn't. I think you can. I think it'll be fine. For the most part, a trade will not be a winning trade or losing trade if you're manually trading because of some of the data. In very rare instances will it impact you too much. Even when I was trading manually, I didn't worry about it all that much because ultimately when I won a trade, it was because price moved significantly. When I lost, it's because price also moved significantly against me. So I wouldn't worry too much about it. I don't think it's that big of a deal. But when you're automating, these trades happen faster than we can click, but they also happen faster than the data can update on TradingView. And so it's a lesson for me in like, okay, let's get the best data possible so that we can have the best fills. That should have been like a light bulb obvious thing. It just wasn't. And I'm okay admitting that, but now we have to correct it. And so that's what I'm doing and working on right now. But let's get into number 3. By the way, that trade I thought was going to be a loser turned into a nice winner. Pretty cool. Now here's the most important lesson I've learned thus far, and I've taken full advantage of this. Your strategy should have 2 types of trades. Your strategy should be ready to take profit on small trades and large trades. Now, I know that might sound like it's contradicting what I said before about the different types of trades you should be taking, but hear me out. A strategy that looks for 50 to 100 points is going to be different than a strategy that looks for 10 to 15 points. But the biggest difference is going to be that stop loss. How much money do you lose when you lose a trade? How much money do you make if you win a trade? Your strategy will greatly improve. I've got a strategy on my screen right now with a profit factor of 3.458. I would task you to find something or find someone who's got the stats that I have with this back test. 65,000 trades. It'd be very difficult to do, okay, on NQ. Very hard to do. You probably won't find one at all. What makes this strategy really good is I look for small trades. My average trade is 122 bucks trading one NQ contract, okay? So 10 points-ish or so, or 5 points-ish or so, it's not 10. But what makes this one really good is I have trades where I potentially could make a ton of money, and then there are trades where I make a little bit of money. But having those 2 different types of wins allows this account to scale, or this backtest rather, to scale up, rather than just one, having a fixed take profit, or even just a fixed trailing stop. I have 2 types of trades that could happen and could win, and those small trades, if you guys watch my live streams, you'll hear me talk about this all the time. The small trades, what they allow me to do is grow the account ever so much. During the day, there will be these times where we get into the perfect trade and it just runs for 10, 15, 20. I think I had one of those trades today as well. It maybe used 15 points or so. And at the time, that's twice the size of my stop loss. Those trades occur as well. I've had trades where they're 3, 4, 5, 6, 7 times the size of my stop loss. What that does is that is what really grows the account. I've got a couple trades that are just massive in size compared to my stop. But then I've got these small ones as well that kind of add to it. And those compound as well. And so I don't rely on hitting a home run because ultimately I don't control if I get a home run trade. The market does. Okay, which is why I believe in scalping over like trying to swing, especially with trading futures or Forex, anything like that, or crypto. It's very hard to predict these long-term trends because there could be a lot of drawdown, but that's a different topic. I go for the small trade, but I'm in the trade and I've got just the right settings so that just in case I can catch a big one. What that does is it gives me a lopsided reward risk ratio, more reward than risk, which is how you get a profit factor of 3.458, which means for every $1 you put in, you get $3.45 or 46 cents back if you round. Okay, which is pretty good. If you push a button and you get $3 back every time you push the button, it costs you $1. We'll just keep giving it dollars, keep getting money back. That's the idea. That's how I've designed this strategy. Now, to provide a different example, but for somebody who wants to trade maybe bigger trades, you're looking for 20 points, you're looking for 40 points. Well, then what I would do is have a chance or have a trade sit to where if you're looking for maybe 25 points, well, then every once in a while, you should be okay accepting about an 8-point profit. Okay. And sometimes you'll get that 25, but that 25 shouldn't be a hard number. Sometimes you get 8, sometimes you get 75. But as long as your stop loss is sitting at 25 or something similar to what your wins would be, you'll be in really good shape. You can modify kind of what I'm saying to whatever you want. It could be points, it could be dollars and cents, it could be whatever you want it to be. But you want to be in the game so that you can capture huge wins when they come because you will have a chance, especially if you automate something, to be in the game when there's a chance for you to hit a grand slam. You want to be in that. You guys have seen me hit a couple of those. I was on live a couple weeks ago. We caught 130-point move. It just dropped like a rock. We were right there. Got into it. We held. We made a ton of money trading like 1 or 2 micros or something. It was insane. But the point is like you want to be able to hit those grand slams, but those don't come often, and you can't control when they come. So you need to have a chance, or you need to have your strategy sitting in a spot where it can take those trades when they're around, but when they're not around, you still grow your account. Because what you don't want to do is let the market bounce up and down, and then hit your stop. That's really annoying, and that will really cost you a ton of money, especially if you're going to let this thing run without you looking at it. Okay, so those are the big 3 lessons that I've kind of come across. I would say this past week to 2 weeks. Now, if you're still watching, you're 10 minutes in, make sure you like and subscribe to the video because what else are you doing here? Now, just to round this out before we get into the highlights, I just want to say a couple things. Number one, the spot isn't for sale yet. I'm still working on it. I need to get all of this information, this whole strategy from TradingView onto NinjaTrader so I can get that tick data. From there, I'll be able to backtest a little bit more with more accuracy. And then from there, I can decide if this thing is actually really good or if it's just okay, we need to shelve it for a while. So the spot isn't available yet. We got to get more detail on how it's going to work with that tick data. I have a feeling it's going to be really good. Fingers crossed, of course, like prayers up, right? But we don't know until we test it out. So I'll probably have an update over the weekend. Today's Friday. Hopefully I get that by Sunday. Monday is going to be a holiday, and we'll kind of watch and see how it works out from there. And then we'll take the next steps. Now, next steps for you as a trader is to decide and go back and reflect on what I just said. Like, what type of trader are you? Are you going for the big move? Are you going for the small move? There's one isn't better than the other. I prefer small move, but people prefer large move all the time. I really don't care. Decide what it is, okay? And then make sure you have the right data because that's highly important. And then from there, make sure that you're hitting home runs, but you're also hitting base hits because both will end up scoring you runs at the end of the day. Okay, baseball reference. I wasn't a baseball guy, but it is what it is. So enjoy the highlights on the back end. Let me know if you guys have any questions, and we'll have more updates and more data to go over next week, which I'm very excited for, and I think it's going to be very positive, and we'll talk about releasing the bot at that point. So thanks for watching. Stick in there. Have fun with the highlights, and comment below if you got some questions. I'll always respond. Peace. Scale it up, and I'm talking about live here. So long position here. Okay, decent fill. Let's see if we can get a trade here that doesn't require a ton of drawdown before going green. Let's see. Okay. 3 points, not bad. Even, good. 30, 35, good. 55, nice. Good, 145, good. Okay, 135 on that one. Super. Long position here. Another dreadful fill. It's okay though, hopefully. Good. 30, good. 35, nice. 60, great. 105, 110, 20, 15. Not the best fill, but that's fine. Kind of delayed a little bit, but that's okay. Okay, let's see here. Good, 35, 90, nice. 95, 120, good. 100, 105, great. Good trade there. Damn, we have here. Oh, I sold 2. I should sold 1. Oops. I'll take that though. 140, 160, good. 230, 320. Okay, we'll take 320 on that. Short position here. In my opinion, let me drink some water here. Geez, 1 second. Okay, 35. We'll let the straight play out first.